This is OwlUp, where learning happens in minutes, not hours. For a deeper journey, explore all our courses at owlup.co. Now, let's dive in. Welcome to Chapter 1 of First Time Homebuyer, the complete roadmap, where we're breaking down exactly what you're getting yourself into when you decide to buy your first home. We'll walk through all the major steps from that first spark of maybe I should buy a place to getting the keys in your hand. Let's get into it. Nearly half of home purchases hit a surprise delay, often right before closing. You're standing there, boxes packed, and suddenly the lender needs one more document. This episode pulls back the curtain so you can see the whole journey before you take the first step. About 1 in 3 first-time buyers say the process felt overwhelming even after they'd done online research and talked to friends. That's usually not because they're unprepared. It's because no one has ever shown them the entire path from maybe I should buy to keys in hand in one clear picture. In this episode, we're going to zoom out. You'll see how your credit score quietly shapes your price range, why pre-approval changes how seriously sellers treat your offer, and how your agent, lender, inspector, and closing team pass the baton so you actually make it to the finish line. Think of it like watching a rehearsal before opening night. You'll know who steps on stage when, where surprises tend to pop up, and which details you can control long before they become crises. Think of this episode as unfolding the map behind the journey, not just the turn-by-turn directions. We're going to connect numbers, timing, and trade-offs so you can see how your choices early on echo all the way to closing day. That median U.S. home price of $387,600 isn't just trivia. Paired with an 8% down payment, it shapes how much cash you'll actually need, how your monthly payment feels, and how sensitive your deal is to inspection or appraisal hiccups. As we walk through each stage, we'll flag where most buyers underestimate time, paperwork, or stress so you don't. Most buyers think of the journey as find a house, make an offer, sign a stack of papers. In reality, it's more like a 9-step chain where each link quietly limits or expands your options in the next one. Start with your money picture. Beyond how much cash you have, you're deciding what kind of buyer you want to be. Will you conserve cash with a smaller down payment and keep a stronger emergency fund? Or push closer to that traditional 20% to avoid mortgage insurance and lower your monthly fixed costs? There isn't a right answer. There's only what leaves you sleeping at night instead of staring at your banking app. Next comes choosing which loan you're aiming for: conventional, FHA, VA, USDA, or state local assistance layered on top. Each comes with its own rules about minimum down payment, debt-to-income ratio, and property condition. That last one is a big deal. Some loans won't touch a place with peeling paint, an old roof, or missing handrails. The type of financing you line up affects which listings are realistic and how competitive your offer looks to a seller. Once you're out looking at homes, every property is really a bundle of trade-offs: price, condition, location, timeline, and risk. A home listed a bit below market might be signaling, "We know it needs work." A home priced at the top of the range is often saying, "We'll expect clean financing, few repair demands, and a smooth appraisal." Reading those signals helps you shape your offers strategically instead of reacting emotionally. When you get into inspections and appraisals, you're no longer asking, "Do I like this place?" but "Does this place make financial sense?" Inspection reports can be dozens of pages. The key is separating cosmetic annoyances from structural or safety issues that impact cost and livability. Appraisals, meanwhile, translate your feelings about the home into a number a lender can live with. If that number comes in low, you're negotiating not just with the seller, but with math. Then there's the quiet middle: title work, insurance, and rate locks. Title research is about making sure no one else can claim your property. Insurance choices affect your total monthly outlay and your protection when something goes wrong. Locking your rate is a bet on interest rate movement and your own closing timeline. Lock too late, you're exposed to rate jumps. Too early, you might pay to extend. As you move toward closing, all of those earlier decisions crystallize in your closing disclosure. How much you'll bring to the table, what you're paying over the life of the loan, and how tight your post-closing cash cushion will be. By the time you get the keys and the deed is recorded, you haven't just bought a structure. You've committed to a specific mix of monthly cost, flexibility, and risk that will shape your finances for years. Some of the most useful signals in the journey are the ones buyers overlook. A listing that's been sitting for 30+ days in a hot area may say more about the seller's expectations than the home itself. Sometimes it's a stubborn list price. Sometimes it's a repair everyone's quietly avoiding. An inspection with normal wear and tear notes can still hide big budget items if the roof, HVAC, or water heater are all the same age. You're not just buying what you see, you're inheriting a future project calendar. When the appraisal is ordered, think of it less as a verdict and more as a second opinion from a specialist on your team who doesn't know you. You can prepare for surprises by asking your agent what nearby homes actually closed for recently, not just what they were listed at. Your challenge this week? Pull 3 active listings and 3 recently sold homes in your target area. Compare list prices, days on market, and visible condition. Note where you'd expect inspection or appraisal friction, and what that would mean for your stress level. Future changes could quietly rewrite the whole journey. If commissions unbundle, you might choose between a full-service guide, a flat-fee strategist, or going almost solo, like picking a coach for a season instead of a one-time game. Blockchain-based titles could shrink weeks of waiting into near-instant checks, but also make mistakes propagate faster. AI-driven underwriting may reward renters with strong payment histories while exposing more of your data exhaust, forcing you to weigh access against privacy in new ways. Treat this whole path less like a one-time exam and more like learning an instrument, clumsy at first, then steadily more familiar. As you repeat the steps, researching markets, decoding contracts, spotting patterns and delays, you're actually building a portable skill set. Even if you hit a pause now, you'll be far sharper for your next move. Before next week, ask yourself, 1. If I had to move in the next 3 months, what's the maximum monthly payment, including taxes, insurance, HOA, and utilities, I could comfortably afford without stressing my budget? And what would I need to trim today to make that number feel realistic? 2. Looking at my last 60 days of bank and credit card statements, what specific spending patterns might make a lender nervous? And what can I immediately pause or clean up so I'd feel confident handing those statements to a loan officer tomorrow? 3. In my ideal first home, which 3 non-negotiables, location, commute time, school district, number of bedrooms, outdoor space, etc., truly matter for my life over the next 5 to 10 years? And which nice-to-haves am I honestly willing to sacrifice if the right house at the right price appears? This was OwlUp, your daily step forward. To keep learning with structured courses and more insights, go to owlup.co. Until tomorrow.